The more things change, the more they stay the same. After an intense 12 months of global quantitative tightening, uncertainty remains the dominant theme in the financial markets. February has brought us a mixed bag of economic numbers headlined by a shocking US NFP print. Are you ready for more? Welcome to Trading Week number 8 of 2023. As active traders, we thrive on the unknown. After all, market uncertainty drives the pricing volatility that we need to generate profits. With the first 7 weeks of the trading year already behind us, there aren't many concrete facts to hang our hats on. Inflation appears to be receding, and the world's central bankers appear committed to combat inflation regardless of the economic or societal costs. But are these safe assumptions? Perhaps the coming 5 days on the markets will give us some answers. This week's economic calendar features an array of key events highlighted by inflation metrics from Canada, the EU, and the United States. Also, the Reserve Bank of New Zealand is poised to deliver its interest rate statement, and the much anticipated FOMC minutes release is up on Wednesday. If nothing else, there will be plenty of action on tap for active traders. Now let's take a look at the key markets with our expert analyst, Connor Woods.
So with the US being closed in observance of President's Day on Monday, we should expect some irregular volatility, some low volume. It may be best, to be honest, just to avoid that US session completely and focus on what Europe has to offer. Because following a softer than expected inflation print in the UK last week, coupled with a fairly cautious Bank of England, I'm wondering whether the pound's going to continue to struggle. And I love this analysis on sterling versus the Japanese yen. So you can see this 1 hour supply zone. If I zoom into that, you can see that was basically, waiting for that to be tested for a long period of time. Then you can actually see what's happened here is we've tested that properly now. And not only have we tested it, we reacted from it, and then we actually broke some sort of market structure. So for me, what I'm looking for with sterling yen, you can see we broke that structure here. We've come up and retested. We've then broken this structure here. We've got some liquidity sitting here. This supply zone is still yet to be tested. So in my opinion, what I'm looking for from sterling yen is a run up towards this supply zone here, and then I think there's a lot of room to the downside here, especially when you factor in that new Bank of Japan governor coming in shortly. This is a market which has good potential and good risk reward to go lower. So it's back to action on Tuesday with important data being released across the globe. In Europe, flash manufacturing PMIs are going to be the main focus before that attention swiftly turns to Canadian inflation and then finally the US flash manufacturing PMI. The data coming out of the US has been strong recently, and will this trend continue to support the US dollar and that potentially sink this Euro USD chart? So when we look at the chart here, and let's get my markings back up. Trade I'm active in at the moment was a retest up towards here around this this on the hourly chart. This 200 moving average coming into play, and you can see 1.06074 as a really key, really for me, demand zone. If I go on the daily chart, it's a little bit clearer as to where I've got that from. That's a key target for me, 1.06074, as to potentially where euro dollar could be heading this week. I would expect a little bit of support here, but if we're going to continue to get that stronger data going forward, maybe just a small retest, and then potentially if we can break below this level, we can go and test 1.04829. Now Wednesday is a very, very important day indeed, a day of significant volatility with central bank action. First up, of course, the Reserve Bank of New Zealand set to deliver its next monetary policy decision as the country deals with the devastating impact, of course, of Cyclone Gabrielle, and our thoughts go to anyone who's been affected by this natural disaster. As a result of this, Kiwi Bank economists believe the bank now should be very careful about how aggressive it decides to be as they deal with the impact of that, the economic impact of that. The shocking scenes in New Zealand are likely now to mean that 75 basis points are off the table, with many calling for 50 as being the maximum required. That's caused weakness in this New Zealand dollar pair. And furthermore, we've got the FOMC meeting minutes due out later in the day, with Fed Chair Jerome Powell sort of underwhelming many traders in his recent comments. I think the word disinflationary has been a consistent feature of his press conferences. This market, NZD USD, has been a market which really has some clean price action at the moment. This is the daily chart. Clear liquidity taken up around towards the beginning of the month, and it's been a one-way ticket to the downside. Expect some resistance here around this 200-day moving average, but that resistance could be a good trigger to then go short. There's a lot of room down here, and the next level for me to watch out for on NZD USD will be this demand zone coming into play here around 0.59489 is the key level for me to watch out for next week. Now on Thursday, the US will release its preliminary gross domestic product figures. However, I think the opportunities are likely to fall in the commodities sector, with inventories data coming out for natural gas, for crude oil. Recently, inventories in crude oil have been above estimate, and there have been, tests of that Biden bid 70 level nearly. Is there another test incoming as oil starts to roll over, as recessionary fears start to maybe crank up a little bit here? This is what I have marked for crude oil at the moment. Pretty much this range that we've been trading between that Biden bid at 70 and that 82 has been, a really good range play if you was simply selling at the top and buying at the bottom. Now, I've always had this demand zone mark. 71.67 is the level of support I'm looking at. You can see how previously we've actually managed to go and test this supply zone. 82 has been a good level to sell from. If you look at now where we're starting to roll over, this is the first sign of that lower high coming into play. You can see that we're starting to roll over now. I think potentially what we may see in oil this week is a rundown, filling the last piece of this imbalance and into this demand zone at 71.16. So late week trade kicks off with really a slate of economic metrics out of the US, the most important being that core PCE price index, which is the Federal Reserve's primary tool of inflation. With CPI and PPI figures, especially PPI, coming in hotter than anticipated, will the core PCE follow suit? If so, I think the markets have a real dilemma on their hands, as that Goldilocks scenario being priced in could be under real pressure. If the plug is pulled on this one, expect significantly large risk off event trading in US indices. So I've got the NASDAQ chart in front of me right now. What I'm thinking potentially is a run up, maybe one last run up into this supply zone at around 12,900. However, it's hard to ignore when we look at the 4-hour chart how this is now potentially starting to roll over. We've had that initial break of structure, but I need to see a break of 12,200 to be sure that we can go a little bit lower. I've got 11,800 in mind if that is the case. If we fail to break this structure, then maybe look for one last bounce from that FOMC meeting minutes up towards that 12,900. But I believe that there's a risk-off event coming very soon.
Thank you, Connor. One of the best things about being an active trader is that we can change our minds. And that's exactly what the markets have been doing since January 1. It's challenging to remember a period of such choppy price action across all major asset classes. With a bit of luck, the picture will begin to clear very, very soon. Now, to be successful in the midst of vast uncertainty, one must stay the course. Falling back on solid fundamentals and structured technicals is what astute traders do to navigate chaotic financial times. Not sure how to do these things? Don't worry, the team at How to Trade can help you stay on the lead lap during the market turbulence. Now be sure to drop into the trading room this week and grab a live stream or two. With a new series such as Diary of a Trader and the Community Trades Workshop, there's never a dull moment. So what will be your favorite market to trade this week? Listed in the thread below. If you're chosen, you'll win a free month's access to the trading room. Well, I'm Shane Vernier of How to Trade in ForexSignals. It's been a pleasure bringing you this video. Thanks for tuning in, and we'll see you next week.